Okay. All right. Hopefully, hopefully the audio recording is working this time. I already did this once, but my microphone was turned off, I think. um, Hi. How you doing? Okay. This is Daniel. We've had a day or two, I think, since the last video. Um, had some issues getting my trading view to work on this laptop here, but also, going to work and at my day job and also doing things for the holidays, so been kind of busy. Um, we've got. All right, so we had the range that I was talking about here. I was saying that I think that Bitcoin is consolidating, and previously I had kind of speculated um, that it may range between $90,000 and $110,000. Since then, some of the traders that I've seen commenting have suggested a range more like $108,000 down to 88,000. To say they think it'll range a little bit lower than what I had said, and so um, while I don't necessarily feel the need to move this down from 10,000, I think it's not unreasonable to adjust the lower end of this range down a little bit to 88,000, just to give it a little room on the downside. Last time we were ranging, we kind of had some dips a little on the low side, so not really any particular reason to doubt that. Bulls are still being bullish. Bears are still being bearish. Some of them have some interesting points to make about how MicroStrategy has been doing an awful lot of the buying for the last couple of months of Bitcoin. And other institutions, there was some talk that maybe Apple or Microsoft might start buying Bitcoin. Did not jump in. Um, and also some points about how MicroStrategy has been doing quite a bit of buying throughout December, and yet we didn't really move up to another price area, although we certainly did see a nice pump up to this high of $108,000. Um, so there's some arguments to be made by them, by the bears, that not so much that Bitcoin is going to crash, but there's some speculation that it may return to its like 100 day or 200, or maybe it's 200 and 300 day. I don't know. Moving average, these longer moving averages to come in and satisfy the CME gap around like 80,000 or 70,000 at some point. Um, that being said, this CME gap, I mean, this was from early November, right after the election results. That were very is a very very bullish pro crypto kind of news event. So I mean, yeah, it's staring me right in the face too. But I don't know how seriously I'm taking them right now because we we are in a bull market right now. Things don't necessarily work quite in the same way. But especially, as I was just saying, because that gap did occur in the days immediately following a really positive news event, I'm not sure how seriously we should take it necessarily. Along with just other things. I mean, CME gaps don't always get filled as much as we like to talk about them. On the oscillator, everything's looking bullish. Um, and we've had a bump up from previous day here. And who was it? Somebody who has a YouTube channel who has an influencer sort of sphere. I think it was the Wolf of Crypto channel. Um, was was saying that they believe that the bottom for this correction is in at around $91,000, and it was um, here on the 30th or the 31st. Um, and they may be right. I certainly That's certainly an encouraging sign for me that they're saying that, as I would prefer it if Bitcoin pumped right now. Some of these bots that I started a little while ago, I did not extend the trading grid down far enough to cover them down to their liquidation value. So they're not trading, they're just kind of hanging out in loss. And while the lower leverage bots will take a little while to build up margin and extend their liquidation value down, it is still desirable for them to be actively trading even as they approach liquidation, just to give you a little bit of a chance that they might, a little bit more of a chance that they might survive an adverse move in the market. So anyway, let's check in on these things, and I was going to see if I could try to touch on something real quick that I had mentioned before. All right, so Bitcoin looks like it might be starting another bullish run here, another pump for Bitcoin possibly coming up. But until I see some strong evidence, otherwise I'm going to consider it as still consolidating in this sort of 88,000 to 110,000 range. So Solana, and I think that a lot of these really were looking kind of similar in the same way that they were all sort of looking similar before too. Solana was one of the ones. This is in loss. It's not on its grid. It's not trading. I was saying that I was feeling kind of hopeful about it, though. We had gotten pretty to the point where the Heikin was probably going to start looking like it might turn around and turning green. Oscillator also starting to look pretty good with this one. The plus symbols have turned white here, and also we're having bullish indications from the oscillator turning light red to dark red. So Solana has broken out of the wedge that I was talking about before. And yeah, I mean, something might happen, it might fake out, but really, I think it's just sort of following Bitcoin, honestly. Um, and so it's good that it's broken out of its wedge, and I think we can consider that a legitimate breakout if you're interested in such things. For me, this is just a good sign because I'm glad to see this heading back towards its grid. Um, this went along with kind of the other ones that I'm going to talk about. Some of these, if this gets back into an area where it's in profit and trading and all that good stuff, I may close the spot momentarily and reopen it with similar settings and just redo the grid so that it goes down all the way to about $150, so that if Solana does swing back down, it at least will continue to trade as it goes into loss instead of just sort of hanging out as an isolated position in loss. Because it's been at risk of liquidation during this time. If price action didn't move back up, it might have gone down instead. And because it's not actively trading, it's not accumulating any margin to help secure it against liquidation, which is not ideal. So if I have an opportunity when I can close it not in loss to do that and then reopen it and change the grid a little bit, I may do that. Wouldn't be a bad idea on my part, I don't think. I have not started an Ethereum bot yet, but I might soon because Bitcoin, I expect that Ethereum, while it's kind of the lesser of these blue chip boomer coins, um, still probably will do rather well as Bitcoin does well. Likely kind of the same sort of thing here. Yeah, oscillator looks very good for pop for Ethereum, and we're coming back approaching our indicator here, and this may rally soon, but I'm not watching it as closely because I don't have anything. Well, I think I have a long position on Blowfin and possibly BYD-Fi on them. I'm not sure. I have a few of them going on a few of these in low leverage. But anyway, so Solana. Oh yeah, we just talked about Solana. And then we'll just go down the list as we have it here. How about that? Dogecoin. I had the higher leverage bot that could have gotten liquidated a little more easily. Looks like we're headed away from that liquidation value. Thank goodness. Not a whole lot of money in it, but but it is a higher leverage bot, and it may still perform well, and it'd be fun to watch. And then, of course, the lower leverage, the 5 times leverage bot with the lower liquidation value has been trading this whole time because these, fortunately, I did set the grid lower down at 0.22. And so we're just kind of, we're looking pretty good for these bots. Doge has got a lot of headroom to go before it gets off its grid on the upside. Right now, as these are recently opened bots, I'm a little more interested in um, watching to see if they can survive and not get liquidated. Although that can always happen further into the future as well at some point, but in the beginning in particular is when I'm usually more concerned about it with these bots. All right, Bitcoin, Solana, XRP. What were we doing with XRP? Right. Okay. So yeah, this one I was kind of bummed before because the older XRP bot got out of its grid and was going to had stopped trading, but now we're back in the grid. Hooray! What was I doing with these? Oh, I guess I had. Some of these were kind of looking like they were forming a wedge after a big pump here, which is not unusual for currencies. It hasn't broken out yet if this is indeed a wedge pattern, but um, well, we'll kind of see. Right, we are seeing some good positive movement here with Ripple. Not seeing these white pluses lighting up here on the indicator the way we like to see, but it is time for it to swing in the upwards range, at least according to the oscillator, and we have crossed over our smooth Heikin-Ashi indicator, which is something that's, when reading this indicator, is generally a bullish sign, where it was kind of previously had hit resistance as it was coming up here trying to touch it, and now is broken across. Although, of course, just like a lot of these other ones, really, it's probably Bitcoin is rallying, and so everybody else is rallying as well. But this is all positive. Hooray! Awesome. We're back into our grids, and the bots are active, which is what I like to see. I may think about, though, if this original XRP bot that's a little bit older is back in, or if it is in profit now, possibly closing it and perhaps taking that margin and either starting another one with the grid extending lower down or moving it to Ethereum so that I have something happening with Ethereum as well, just to kind of spread out my activities a little bit more, hedge against something unfortunate happening to one of these coins in particular. Make me a little less vulnerable. Bitcoin, Solana, Doge. Pepe, don't have a grid bot going, but Pepe is doing totally fine. Had a nice little pump, kind of came down a little bit, but doing good. Bullish signs for Pepe. And what else? Gosh, ADA, yeah. ADA, this one I think is kind of a similar situation to Solana, where right now, it's kind of a similar situation to Solana where it was in loss, and this one, gosh, it got real close to liquidation at one point. We're looking to cross over here, which would be a nice bullish sign, bullish indications on the oscillator, and so hopefully if Bitcoin keeps rallying, this guy will get back up into its grid, and if it does get back into profit, I may think about restarting it and extending the grid a little bit lower, but maybe not. We'll see. I mean, I set these up in hopes that I could sort of focus the grids on these bots and focus these bots on these higher price ranges, as I do think these big cap boomer coins are long term going to do rather well, as Bitcoin I suspect will do rather well. And so the idea was not to have quite so much of the margin down here, but I could easily, I think, remake this one and just extend this grid a little bit lower so that it at least covers down to the liquidation value. That way it'll have a little bit more resistance to getting liquidated in the event the price does dip back down into that area as it did before. And since it's a pretty wide grid in general, that it may not influence things as much as it could. Um, yeah. So, anyhow, positive signs here, but I'd like to see this continue before I make any changes to the bot or think about closing it. So, hooray! What I was hoping would happen may be starting to happen here with this Cardano bot. Uh, okay. That's, off the top of my head, that's all I've got going right now. I don't have my list of the bots to look at them, so I haven't updated the liquidation values or anything, although I doubt that they've really changed tremendously over the last couple of days. The 5 times leveraged bots will take a little while to build up margin and really significantly change their liquidation values. Um, so it's not like I doubt it'll be a little while before I really feel like I need to update the liquidation values. I think on a lot of these, ApeCoin bot still doing great. Good stuff here. It's in its grid. It's got a narrower grid than these other ones, but again, this is a higher leverage bot. I was more worried about. With higher leverage bots, you tend to be a little more worried about them just smacking down into liquidation and you losing your money right away at the beginning. And so they tend to fundamentally be shorter. Well, not always, but for me, shorter term bots, kind of in focus. But this one has fortunately accumulated a fair bit of margin, so it's reasonably well hedged against liquidation. Not super worried about that happening anytime soon with this guy, and that should actually improve over time as it continues to trade within its grid. So we're doing just fine. It also looks like it may pump here and it may get up above its grid, but if it does, that's really not a problem for me at all. Whereas if it maybe has a little pump but doesn't necessarily get up over its grid, then hooray, awesome. I would be perfectly fine with ApeCoin just going sideways for a little while, as I have a relatively narrow grid set on it, and sideways motion would be much better for me than having it just sort of range up in here for a little while. So at least for the time being, this may range, ApeCoin may range up and down perhaps with Bitcoin, and it might go up and then come back down and trade for a little while, and then go up and stop trading, go back down for a little while. But that's fine. I'm really, as long as the bot itself doesn't come into risk of liquidation and is having a reasonably productive periods in here, this could still perform rather well. And as it is sort of tricky and problematic trying to get these higher leverage bots to start off and not immediately get liquidated, I'm perfectly fine with having tolerating the bot kind of pumping up and having breaks in its trading and then going back in to trade again. I wouldn't fuss with it too much. I'd rather leave it going. Whereas with the lower leverage bots that, like some of these other ones, I'm not as concerned about stopping them and remaking them. Although I will, of course, want them to be in profit before I start doing that, so I don't lose any of the margin I put in initially. There was one. What was it? Dogecoin. I wonder how far did it. I think I might have set the grid on this higher leveraged one up to the same level as the lower leverage one, about $1. Yeah. So this has a higher leverage grid going, but I did actually set the range up pretty high, which using the arithmetic setup with these, where the grid lines are really close together here in the beginning, and then as they extend further away in the grid, they get further and further apart. Having a higher leverage bot, if you use that style of grid, that kind of goes way up in one direction, or both directions, is not as big a deal because you still have most of your grid lines concentrated around where the current price action is. And so for purposes of trying to get the bot to trade more frequently at the beginning to accumulate margin and secure itself against liquidation a little bit more, it's not a huge deal. It's not at the end of the world for me to set a bit of a wider grid. Um, but they're probably, although, I have not been doing this for 10 years, others may have more useful insights than me, but uh, there also probably is something that could be said for doing it the way I did with this bot, where I had a rather narrow uh, range that I was trying to trade in. And so all of the grid lines in this one are probably going to be pretty compressed, and have a relatively consistent um, amount of profit in between each grid line. Um, Whereas with the Dogecoin bot with the higher leverage here, um, you're going to see grid lines closer together with a smaller profit in between each grid line here. And then as you get up higher, you'll see wider gaps in between the grid lines if I were to draw them out, which would take quite a long time. And also, uh, when looking at the interface for the bot, it would have a range of maybe zero point 0.3 or zero point 0.4 or zero point 0.6 or zero point 0.8 or something in between the grid lines here, whereas getting up closer to the top of the grid, it would probably have a profit per grid line of like 2% or 3% or 4% or 5%. In more successful, more spot grid bots made by people who are doing longer than this and who show up on like the rankings of the higher performing spot grid bots. A lot of time their grid bots have in spot again, which is unleveraged, so it's kind of a different animal a little bit, but similar. Um, in spot, you would have often 8% or 10% or like 5, 8, 10, 7% profit in between grid lines. So in spot, when people set up these bots, or at least the better performing bots, a lot of them have really, really wide grid lines. In terms of the ones that actually perform a bit better, whereas the ones that are leverage bots, because you have this risk of liquidation kind of um, being a consideration, using arithmetic grids instead of geometric grids, where the grid lines are not all exactly evenly spaced, but instead clustered more around the price action where it starts. Um, and also having them a bit closer together, because early on you sort of need the bot to be eking out as much margin as it can, because you want to be trying to extend this liquidation level down, so you don't just lose all the capital, the margin and the profit in the bot. It is more of a consideration. So anyway, that I think updates us on all of these things. So good to go there. Ooh, that's very bright. All right, so I was going to talk about the rebalancing portfolio thing, and I won't get so much into the history about the engineer Shannon and the funny nicknames and stuff that people have for this, but I wanted to sort of explain or try to explain what uh, yes, yes, I am Daniel. That's great. Um, I don't use this program very often. How the rebalancing portfolios work, and you can do this with leverage positions. I believe I have not come across an exchange that offers that for cryptocurrency, though, so I'm currently doing it in spot, which I think is the more usual way to do it, certainly in cryptocurrency, but I think it's also pretty much how most index funds in the stock market do it as well. So the phenomenon that the engineer, maybe 100 years ago or so, named Shannon, noticed or discovered or sort of came up with, um, was a sort of a plan for investing using a rebalancing strategy, right? And So his sort of theory here is that if you have a portfolio or a bot or whatever you want to call it, we have a setup where you have, say, half of your money in, for our purposes, we'll say Bitcoin, since we're usually talking about cryptocurrency on this channel. But it could be anything. It could be Apple stock, or it could be Microsoft stock, or Nvidia, or something. Any asset that you want to invest in. Here on the left side, and on the right side, in the standard, the early examples and classical examples, and how some people do use this, absolutely. You had just U.S. dollars or USDT, which is to say a flat, stable currency that doesn't go up and down in value. Now, of course, U.S. dollars actually do go up and down in value, and accordingly, so does USDT. But for the purposes of the example, we're going to say this is USDT, this is a stable coin, its value doesn't change. Um, just to kind of make things a little bit simpler. You don't have to use a stable coin for this. You can absolutely use Bitcoin and Solana, or Bitcoin and Ethereum, or Bitcoin and ApeCoin, for example. ApeCoin kind of doesn't correlate with Bitcoin all that great compared to some of the other big cap coins, and so it's actually one that I might suggest if you were going to do a pairing like this with Bitcoin. But anyway, so the principle of this is, if you have, it'd be nice if it had labels on the bars themselves, but I don't know how to do that. Anyhow, if you have a 50-50 setup like this, and this is how you start out, the portfolio aims to have the same amount of money, US and valued in USDT in this case, we'll say, in both uh, bars, in both sides. So it wants the value of the cash, the USDT in the account, and the value of the Bitcoin in the account to always be the same, right? And you can set these up to rebalance either once this percentage goes above a threshold. So you can set it up so that, say, for example, if the value of Bitcoin goes up a little bit, this would become, say, 2%, and uh, and so the value of the USDT in the portfolio would go down proportionally accordingly, to 48%. And so, oh wait, no, I haven't flipped around. This should be 48. Okay, I'll get it figured out here. Yeah, here we go. So if the value of Bitcoin went up a little bit, then it would end up becoming 52%. So it went up a little bit. It could come up to be 52% of what's in the portfolio, and the USDT would be 48%. And so you could set it up and tell it that if there's a 4% difference in the percentage, that would trigger a rebalancing of the portfolio. But these also are commonly set up so that they rebalance once a month, or once a year, or once a day, or once a week, or something like that. Just depends on your preferences. So stock rebalancing portfolios, I believe, tend to rebalance very infrequently. Things don't move quite as fast, so it's not worth the trading fees to rebalance super frequently. I think that they're much more prone to rebalance once a year, or once a month, or once a quarter, or something like that. Um, but with cryptocurrencies, there's more volatility in the market, and so people are a little more inclined to have these rebalance a little more frequently. They feel like that they can get more of a return out of these. And this strategy, because it's a strategy that allows you to utilize volatility in the market, um, works really well in cryptocurrency because cryptocurrency has a huge amount of volatility compared to stock markets. And so this works rather well in the stock market, but it absolutely works well in cryptocurrency, although it is also prone to the same weakness in cryptocurrency it has in the stock market, but we can talk about that um, some other time. So, in the event that this happens, Bitcoin goes up in value and it crosses the threshold, and so it triggers a rebalancing. And using a threshold, by the way, is what I recommend. I recommend having these triggered by a threshold and not doing it at a regular time interval. Um, but we can also talk about that later. So what this would happen is, say it's a few days has passed, a rebalancing has been triggered, Bitcoin has gone up in value, and so now what's going to happen when the rebalancing occurs, some of the Bitcoin that is being held by the bot, let's just go with bot since that's what we use in cryptocurrency, will need to be sold in order to make these two be 50-50 again, right? So in order to make this rebalanced so that you have exactly 50% of your total value in USDT and 50% of your total value in Bitcoin, um, you would have to sell some Bitcoin in order to bring it back to 50-50, right? Now, the opposite can happen with these bots where, say, you have a Bitcoin goes down in value, and so you end up looking more like this, right? And so rebalancing may get triggered, or if you're just rebalancing once a week or something, that just may be how much Bitcoin has changed in a week. In this scenario, when the rebalancing occurs, the bot would automatically, in order to make these equal again, would automatically need to take some of this USDT and buy Bitcoin in order to even these out and bring it back up to 50-50, right? And so, as a consequence of this rebalancing action, what's essentially happening is that when the one asset increases in value, when Bitcoin increases in value, the bot will, when it rebalances, sell, and so therefore it will be selling high because the price has gone up, and so the bot will sell, right? Whereas if the opposite happens and the price of Bitcoin drops and a rebalancing happens, then by definition the bot will take some of the cash, some of the USDT, the stable coin, and it will buy while the price is low. And so whenever this rebalances, it's always going to be either buying low or selling high. And that's that's what you want to do when you're trading, investing. And so fundamentally, just by the action of this rebalancing, say if you set it to do once a day, regardless of whether Bitcoin is up or down, you're going to be either buying low or selling high. This is also kind of nice in that you don't have to quite necessarily eat the full decrease in value of Bitcoin in terms of the value of the total portfolio, the total bots. But you also don't quite benefit from the pumps quite as much because half your money is in USDT, and half of it is in Bitcoin. So therefore, you're sort of only half invested in spot and Bitcoin this way. But mathematically, over time, particularly with high volatility assets like Bitcoin and other cryptocurrencies, this has a tendency to actually outperform just buying and holding in spot. Now, it does depend on the assets and how you have things set up, and this type of setup is the least productive way to do this. It's also the simplest, though, and the easiest to understand, and it's also very commonly used because it's a perfectly good way to do this type of rebalancing portfolio. Having half of your money in USDT and having it sort of automatically spot trading for you this way, kind of, sort of, um, is a great way to insulate yourself a bit from the overall volatility in the crypto market. And so it's very commonly used for that purpose, but also it fundamentally will tend to do a bit better than just holding in spot. And so it's a great baseline strategy for investing in spot in cryptocurrency, in particular because in crypto the extra yield you get from this buying in the dips and selling at the highs, because crypto dips so deep and peaks so high, um, has such great volatility in it. You're going to see a better benefit from using this strategy compared to just holding in spot, relative to the stock market, where there's not quite as much volatility. So yeah, so that is the basic fundamental of how a balancing portfolio works. And this is the simplest setup you have. It's the one that the only one I really probably should try to cover today, where you just have cash on one side and something you want to invest in on the other side. If the value of Bitcoin, in this case the blue is Bitcoin, goes down and rebalancing happens, you will automatically buy in uh, with some of your cash in spot, and then you'll kind of sort of buy halfway up to here. Whereas if the opposite happens and the value of Bitcoin goes higher, um, you will automatically sell half the difference between these two bars, and you'll get a little bit more USDT, and you sort of end up with both bars being a little higher than they were before. Um, Whereas by that same token, when it swings the other way, you end up with both bars being only half as low as they were before. Um, so it's a great way to kind of reduce the overall fluctuation in your portfolio's value when you're in cryptocurrency, but also this sort of has a dividend in and of itself, which is to say, if you have a currency like Bitcoin, uh, and the Bitcoin, say a Bitcoin over the course of a year just goes sideways, it doesn't really do any price exploration into lower or higher range. It just kind of sits and goes up and down around the same price range. You will still make money off of it because you're essentially successfully trading in spot every single dip and every single peak every single time when you use this strategy. You're just not getting 100% of the successful spot trade because you're kind of doing half of it. So and there's an actual curve to how much uh, of a extra return you get from doing this. But just to simplify things, you could say that you get half of the profit that you would get if you successfully spot traded from a dip up to a peak. Each time that happens using this strategy, um, well, it kind of doesn't really matter because you're still successfully spot trading every single dip and every single peak and just getting 50% instead of 100%. And you can do this automatically using this type of strategy without having to do any technical analysis or be an expert traded, or sit and watch the market all day and just have that be your entire life. So this is a terrific tool that that does get offered in some places, but not a tremendous number of places, bizarrely, I think, in cryptocurrency, or at least um, in terms of the places that I am seeing available to me as a U.S. citizen, legitimately to invest in cryptocurrency. There probably are OKX and other places that offer them. But Pionex does, I know, because the U.S. Pionex branch, um, the branch of Pionex that does offer services to the U.S. offers them. So I imagine the main Pionex company site does offer it as well. So that's a real basic um, starter explanation of how the rebalancing portfolio works. Just a straight up uh, having cash on one side, Bitcoin on the other. The cash will always either buy when the value has gone down, or it will always sell when the value goes up, but it'll just be sort of half uh, because that's how this is set up. Um, yeah. Okay, so that is all I've got for you. I'm Daniel. This is the Trade Game channel. God be with you, and please be good to one another. Take care of yourselves. Uh, I'll talk to you later.